You need to see this video, especially if you're one of the many Canadians who have already been quickly talked into getting life insurance on their mortgage or mortgage life insurance. Mortgage life insurance in Canada is something for the most part that I am very much against. And as you will soon see, I believe it's one of the biggest cash grabs for the Canadian banks. In fact, there are a lot of Canadians that get talked into signing up for mortgage life insurance every day without realizing just how expensive it can be. And in this video, I'm going to break down exactly what mortgage life insurance is, how to spot it, why you should probably avoid it, and how to opt out if you've signed up already. Let's jump in. Imagine this, you're buying your first home. You're sitting across from your bank's mortgage specialist, diving into the paperwork. Everything is smooth sailing as they explain everything in detail. It's an exhilarating moment, buying your first home, a symbol of your new beginnings and your dreams of home ownership coming to life. You are filled with happiness and anticipation. And then, right in the middle of your excitement, the mortgage specialist says,
"Congrats on your new place. This is probably one of the biggest investments of your life. I think you'd agree. It would be very wise to protect such an important investment, right? Just think, what if something completely out of your control happened? You couldn't pay the mortgage anymore. How would your family cope?"
Then, without skipping a beat, they whip out an application for mortgage insurance.
But don't you worry, we have you covered. This small additional cost will provide you with mortgage life insurance.
And if something were to happen to you,
Your mortgage payments would be taken care of.
and the best part,
We can roll this very small cost into your monthly mortgage payments. You might not even notice it.
how does that sound?
Well, as you're still pretty happy in the moment, you say, of course, that sounds great. And then, with a quick signature and a handshake, often in less than 2 minutes, you feel assured. We're now covered and those payments seamlessly blend into your mortgage, almost slipping by unnoticed. Sound familiar? Well, almost every Canadian that has ever had a mortgage has found themselves in this situation, completing a very costly transaction, often in less than 2 minutes. They sign up for mortgage life insurance without fully understanding the coverage they're actually getting. All they know is that they are covered, and if something bad were to happen, their mortgage is paid. But today, I'm going to dive deep into some eye-popping examples to illustrate just how much more you are likely to pay for that coverage that may not be in your best interests. But before we explore this, you might be wondering, who am I and why should you even listen to me? Well, my name is Joe and I'm from IA Private Wealth and IA Private Wealth USA. And there are literally thousands of unlicensed or unregistered financial influencers on YouTube providing some sort of financial guidance in their content. The problem is that the vast majority of these finance influencers aren't legally registered to give advice on financial concepts, but in a lot of cases they do. I am a fully registered cross-border fiduciary portfolio manager and investment advisor, registered in 7 Canadian provinces with CIRO and in Texas with the SEC in the United States. The content on this channel tends to garner a higher level of trust associated with it because I'm registered to be able to provide advice to the securities commissions in both Canada and the US. And with those registrations comes strict regulations and high standards that I must abide by. This helps ensure that I share the most reliable information on financial planning and retirement strategies on each side of the border. That said, please take a moment to read my quick disclaimer here and make sure that you consult with your portfolio manager or investment advisor before making any financial decisions about anything that you see on YouTube. Speaking of YouTube, I want to take a quick moment to thank you all as I recently crossed the 1,000 subscriber milestone on my Canadian channel. I am humbled beyond words that over 1,000 people would take the time to tune into my channel every week, and I thank each and every one of you for helping me hit such a great milestone. For those who are new to the channel, if you happen to like and trust this content, please consider subscribing and hitting the like button. It supports the videos tremendously and it helps us reach many more viewers, so thanks in advance for your support. Also, if you're from the US or have cross-border needs, you can feel free to check out my affiliate channel at Joe Macek USA for US retirement planning content. Now with that out of the way, let's dig deep into how mortgage life insurance works. And for this video, I'm going to visit a few bank websites in no particular order to show you exactly what I'm talking about. Now, I want to clarify that I'm not targeting any specific bank in Canada because in my experience, they all tend to be the same. But as we go through these examples, you will see how consistent their practices can be across different institutions. Okay, so first let's go to the TD Mortgage Payment Calculator website. And before you ask why we're going there, it's because on that page, you'll see an option for TD Credit Protection, which is essentially mortgage life insurance. And then we're going to walk through a quick but simple example of a typical typical mortgage. We're going to enter $400,000 as the mortgage amount, which is a pretty common figure. Then we're going to set the mortgage term to 20 years. And the reason why we're going to do that is because we want to compare that directly with a 20-year term life insurance policy later on. This will show you the cost differences and benefits apples to apples for a $400,000 mortgage. Also going to skip adding the critical illness coverage to keep things straightforward. And this is the interest rate, which is actually one of the better ones, although you could opt for a 5-year fixed rate of 5.31% or similar, but let's stick with a 3-year fixed rate for simplicity's sake. By the way, the interest rate doesn't significantly impact the calculation because you'll be paying down the mortgage over time with regular payments. So let's proceed and assume that you're 35 years old based on these inputs. Your monthly payments will be, according to this site, $2,766, which includes TD protection. This TD protection, which is in fact the mortgage life insurance, costs $50.75 per month, starting from age 35. The important thing to note here is that the mortgage life insurance is designed specifically to cover your mortgage. It does not cover anything else. The problem with paying $50 per month for the next 20 years is that as you make your mortgage payments, you reduce your mortgage amount each month and thereby reduce your insurance coverage. However, your premiums don't decrease with your mortgage balance. You'll still be paying the same $50.75 every month until the mortgage is paid off. So again, if something were to happen to you like passing away, the mortgage life insurance will pay off your mortgage balance. It doesn't offer any additional benefits or cash to your family. Over time, the amount of your coverage decreases as you pay down your mortgage. For instance, after 6 years, your coverage drops from $400,000 to only $320,871, as that's the outstanding balance at the time, according to this website. This is one of the main issues with mortgage life insurance, is that while you pay a fixed $50.75 monthly premium, your coverage declines over time as your mortgage decreases. This decrease in coverage can be a significant limitation. So what do you do about this? Well, what you could do is just get a term life insurance policy for $400,000 that does not decrease in value. And how much would that be? Well, interestingly enough, TD also offers term life insurance. So let's look into what TD life insurance will charge you for that same coverage and compare how much you would pay for full coverage versus mortgage life insurance. And you really want to see this because when I ran the numbers for the first time, it was hard to believe even for me. Now, suppose you're 35 and you decide you don't want to pay that amount of money for declining coverage. Instead, you want $400,000 coverage for the next 20 years. If you were to pass away in, say, year 10 with $252,000 remaining on your mortgage, having a term policy means that your family would get a check for $400,000 and easily be able to cover your mortgage of $252,000, and then they would have an additional approximately $148,000 left over or so for their expenses. Let's go through a generic price check on the TD Life Insurance website. I'll enter July 1st, 1989 as the date of birth, which makes you 35 years old, and I will select Manitoba as the location. I'll indicate male gender and no use of tobacco or vaping. And let's first check the price without being a TD customer, and then we'll compare it with being a TD customer, in fact, having that mortgage with TD. Let's opt for a Term 20 policy, providing coverage for 20 years, just like in our other example. And it looks like the TD Life Insurance website recommends that you will need approximately $675,000 worth of coverage. As we can see here, even though the coverage is higher than $400,000, the premium is still notably lower than what you would have paid buying the mortgage life insurance through TD. But to ensure a fair comparison, let's adjust the coverage amount down to $400,000. Well, now the cost is just $36 per month, which is far less than the original $50.75 per month that you would normally be paying for mortgage life insurance. And here's the key difference. Again, this coverage doesn't decrease over time. With this term life insurance contract, you maintain $400,000 of coverage for the entire 20-year term. So not only are you paying much less per month, but you're also keeping the same level of coverage throughout the entire duration of the TD term. Now let's consider if you were a TD mortgage customer with a 10% discount applied. Your monthly premium for $400,000 in coverage would now drop to $32.40. This illustrates a significant advantage over mortgage life insurance, where you lose coverage every year and you're paying $50 every month. Now again, this is within TD Bank, comparing their mortgage life insurance to their own term life insurance, and it reveals a stark truth. Buying mortgage life insurance is generally not worth the money you are paying. Despite being under the same roof, TD offers two vastly different deals: mortgage life insurance that diminishes over time and costs more monthly, while their term life insurance maintains its coverage throughout the term and it's cheaper. That said, TD isn't alone. Let's shift our focus now to Scotiabank. We'll use their mortgage calculator to see if we observe any similar trends. Setting the principal again at $400,000 and choosing a 20-year amortization, the monthly payment comes out to around $26.83, which is comparable to what we've seen before. The interest rate here is 5.25, slightly different from before, but it doesn't really matter. And now let's add the mortgage protection. For a 35-year-old in Manitoba opting out of critical illness coverage, the monthly cost jumps to $74 per month. This is significantly higher than TD's $50 a month for mortgage life insurance. Now let's see if Scotiabank offers life insurance options. Navigating to Scotiabank's life insurance page, we're going to request a quote online. Setting the coverage at $400,000 with a birth date of July 1st, 1989, male, non-smoker, and a term of 20 years, we find that the quote comes out to just $33 per month. This is far lower than the $74 per month cost for mortgage protection from Scotiabank, and pretty much on par with TD's life insurance quote. Oh, and by the way, there's a premium discount available. So let's assume that you're a customer or employee to see how it affects the quote. Okay, it looks like the quote drops to $29.97 per month for the first year for the same $400,000 of coverage over a 20-year term, and then goes back up to the other quote after 1 year. But again, as I said earlier, the banks really aren't that different. They seem to be fairly similar in terms of rates. Okay, so let's take a closer look at Royal Bank now, and we're going to use their mortgage calculator. We'll set it to a $400,000 mortgage and we'll calculate the payments. Interestingly, they don't seem to include insurance here, which is quite surprising, but let's calculate it anyway. Oh, there it is. Now they offer the mortgage protection, and your payment is going to be $2,658 on a $400,000 mortgage. It's a little bit lower due to the reduced interest rate, but now for a 20-year amortization, let's customize our options. We are aged 31 to 36 in Manitoba, and we're interested in life insurance only. The quote, Royal Bank's quote for mortgage protection comes out to $60.59 monthly, covering our mortgage. However, as your mortgage again decreases over time, that $60 premium covers less and less and less, dwindling to just $60,000 by the end of the term. Not ideal. So let's see if Royal Bank offers standalone life insurance and check out their life insurance quote. They do have one. Okay, let's set it for Manitoba, July 1st, 1989, male, and assuming no prior coverage. Let's adjust the coverage term to 20 years and the amount to $400,000, and it comes out to $20.84 per month. Oh wait, let's correct that. It's $31.18 per month for $400,000 worth of coverage over 20 years. So the takeaway here is very clear. Opting for standalone life insurance is almost always going to be better for you than including it in your mortgage. So the next time your mortgage specialist asks if you want to get mortgage life insurance, you should probably just say no, or ask them to pull up the life insurance quote from their life insurance division. But what do you do if you've already signed up? How do you cancel if you've signed up? While most banks offer the flexibility to cancel mortgage life insurance at any time, unless it's a specific condition tied to the mortgage agreement. Even in such cases, it's typically possible to secure your own life insurance coverage independently and then subsequently cancel the bank's insurance policy. This approach allows you to tailor your insurance to better suit your needs and possibly save a boatload of costs, especially if you find more affordable or even more comprehensive coverage elsewhere. It's critical to review the terms of your mortgage agreement and your insurance policies to understand fully your options available and ensure seamless transition without compromising your financial protection. Here's the bottom line. If you're relatively healthy and not facing insurability issues, exploring standalone life insurance options outside of your mortgage life insurance will likely save you a significant amount of money. If, however, you've ever been denied when applying for standalone life insurance coverage, mortgage life insurance may be your only viable option. Typically, mortgage insurers don't require detailed health questions, which is why I think costs could be higher due to the broader risk pool that they cover. However, for younger individuals in good health without significant health concerns, opting for standalone life insurance outside of your mortgage is often the more sensible choice. It not only tends to be more cost effective, but also provides more comprehensive coverage that remains remain steady throughout the policy term, helping to ensure better protection for you and your family's future. Did you know that navigating the uncertainties of the market and your finances is generally smoother with the guidance of an investment advisor or portfolio manager? Studies have consistently shown that individuals who work with an investment advisor or portfolio manager tend to accumulate a net worth up to 3 times higher on average compared to those that go it alone. But that's not all. There's a significant impact on overall well-being, with those who seek professional advice exhibiting higher levels of happiness and lower anxiety. Do you want to know an easy way of identifying what kind of plan you have at work? Or maybe you want to find out about my latest upload? Well, I've got everything all queued up and ready for you. Click here for more amazing financial insights. I'll be waiting. We'll see you soon.